Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 13th of May, 2024. And it's 6:05 p.m. Central Time. So a little bit of a pullback tonight in the stock market, but you know everybody's waiting on now the next 48 hours of reports. Tomorrow morning, we're going to get the PPI. Wednesday, we get both the CPI and U.S. retail sales. So in looking at this, National Federation of Business, their index comes out at 5 in the morning, but the big report is at 7:30. That's the April producer prices. Redbook Group comes out with their numbers at 7:55, and then the next big report after that, way in the afternoon, all right? That doesn't mean you won't get individual stocks reporting and so on with earnings. You know, you're getting to the end of that. Next week's the big report when we get NVIDIA. I think you got Home Depot coming out right now with theirs. So there's other things that are definitely going on. But this is a hard market here because you're at a crux. Do we go up and set up another up level in stock indices? So if the market gets PPI, CPI that it's initially weak, as long as they're not crashing numbers, the market's going to look upon that very favorably and say, aha, the Fed doesn't have to wait so long, blah, 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 and the market will go into a buy mode. Conversely, if you get a real hot number, you got a problem. All right. A moderate number where you keep things about where they're at, is that stagflation? So the market wants to see something on the weak side in order, I think, to get itself going. Does that mean I'm right on this? Of course not. You know, herd mentality takes over. Today, for example, you saw the Keith Gill came out, and, you know, he's very famous for the meme stocks. So he came out with his kitty talk and so on. Normally, he put out a picture. So there's a guy sitting, and then you see him leaning, and he's got an arrow. That means he's all engaged in the market. And with that, the AMCs, everything, you saw short covering. GameStop exploded with it. This guy hasn't been heard of in a couple of years, and bingo, comes back. He's got a huge following. It doesn't matter what the values are. He goes after stocks that the pros have heavy short positions in, and they get nailed, all right? And he proved that the crowd mentality can work, and he's got the following. Well, you see that in futures all the time, not from him, but you see it all the time. You can see it in commitment of traders, which is old data, unfortunately. I wish they had a way to give it to you right up to the moment. It would be useful. I find that it's not useful because it's so old, sometimes a week to 10 days old. Nah, traders can move around too much. In the gold, this is a support zone right now. In fact, from here down to the 2310 zone, big support areas, I see it in the June gold. Silver is still relatively stronger than gold. The copper market's been gaining. If you think about it, Anglo-American's gotten more bids. Now they're up to almost a $43 billion bid for the company. It just tells you it's worth more money there. All you need to do is read in the market about Israel. Now with the pincers, its divisions going the north and the south, and the bombings going on. 400,000 people, by some estimates, have now fled the new area of Rafah. So obviously the fighting's getting worse. Qatar is wondering, should they throw Hamas out? I don't know that they should, I'll be honest. We don't think of Qatar as being a terrorist country per se, but you need a sane area where you can communicate with people like this. If they go into Syria, how do you communicate with them? I mean, I don't see Israel sending their delegates into Syria, do you? I mean, maybe you do, I don't. But that's basically how you've got things going here, and you've got to be a bit concerned as to what's going on. Now, obviously, we are 2 weeks away from today. 2 weeks from today, we have Memorial Day. It seems like, you know, it's supposed to be far away. It's not. It's the last Monday of the month, which is the 24th, if I'm correct on what I'm saying. Let's see, 27th. So it's right in front of you there. So be careful with that. Nat gas to me got a little too high. Bonds and notes, they're going to mark time. I want my traders to applaud me on the coffee call I made for them if they decided to take a super high risk trade to be short on Friday. Thumbs up, okay. I ate my heart out today. I had orders in for hog sales. Do you know what I missed the trade by today? One tick. And then the market let go. Not my day. When you get that close and you could have had it, maybe I wouldn't have got it, Phil. I don't know. And that was what I told my subscribers. All right, so when we look at what's going on here, you have to have a bullish bias, at least I believe you do. That doesn't mean you have to listen to me. When prices are over the 18-week moving average of closes. I got this still saying, I know I changed it. I must not have saved it right. This is the 18-week moving average of closes. Before I close this tonight, it will be fixed and saved. I think I know what I did wrong. But that's basically where you're at on the chart, all right? So this is the area. Now, if you start breaking through this low right through here, let's just say under the 5,000 level, be careful. At any point, this market can give you more than a 5% correction because you've got a high PE ratio. Are you going to take out these highs here? This is the real question for the market. Do you have enough power here to make a higher high? Traders are already talking the next levels to 54, 5,500 level. Or do you go under 5,000 and you begin a correction mode? When you take a look at the daily bar, you can see how the markets come up. And on this one, you could see you're pretty far away still from everything. But the trend is up. You've had a pattern here of higher lows, higher highs. You can't fight that. It's there. The market's been over the 18-day average. My bias is up as well. And you know the number that's been curtailing the rally, and that's the Bollinger Band. And it was right here. And now the market's moving to the right-hand side. So get nervous if you take out the lows through here on the daily chart. That could open you up for the 51.44 area. So it's a possibility. Conversely, this is your goal if the market takes off to the upside. You can see it's right here at 53.33 and a quarter when I put on this, and you have an embedded reading. Everything's bullish in this right now on this chart. That doesn't mean I'd want you to go into the report, but my work is friendly. You'd have to get the slow stochastic under 79 for it to say, nah, you've peaked out and the market's going back down there. In the NASDAQ, the old high, 17, I wish I could say old. This was made just this week at the end of March, 18,708.50. The trend up, the bias up, getting your embedded reading. Getting your embedded reading, trend up, bias up. And another event might happen here. Is the 18-day average going to cross the 100? Moving average traders like that to occur because it gives the impetus to the market that, crossovers, long-term average, short-term over it, everything's set up for bullishness. And yes, that would be the case. So the next 48 hours, going to deny or going to embrace that thinking. And that's how I'm viewing it. So got to be on top of it. In the morning tomorrow, when we do the Spider ETF at 9 and first thing in the morning, we won't have a real handle at 6 in the morning when I do my morning subscriber video. But I will, obviously, after 7:30, and if there's special things, I'll be issuing special updates in the market. I'm more likely to do that after the CPI data. I think you use the PPI data to extrapolate what the CPI might show. Here in the Russell, are we going to get the 18-day average to come to the 100 and kiss it or turn back down? Here it's not quite the same. You are trying to embed. You can't count tonight. So let's just throw away Tuesday. But you can go, both numbers were over 80 on Monday. Both numbers were over 80 on Friday. So all they had to do is be the day before, both over, and they were. So as far as I'm concerned, you've got your markets embedded until the red lines close under 79. I say the pros are buying the markets, and they'll see what goes on. You'll probably have lighter volume until the 7:30 report comes out, and then watch it. The algorithms are going to be, which way, I don't know, but they'll be all over the market. When we take a look at what's going on here with 10-year notes, you've got higher highs, lower lows, nothing to do there. 5 years doing pretty much the same type of game plan on this, but you're keeping all the markets. If we come back here, you're over the 18-day average. So you're getting correction nods on them because you're getting, in some of them actually, lower highs, lower lows. Let me come back to that right here. I should move that red arrow over there, but that's the type of game it's trying to set up. But as long as you're over the 18-day average, the bias is up, so it's a correction within a bull market, which makes sense in front of these two reports. In the dollar, you're in a downtrend, but you've narrowed in the Bollinger Band, but in a downtrend. So the market would have to get over 105.64 to negate the downtrend. If it continues down 104.75, the lower Bollinger Band is the first support. The flip-flop is taking place in FXE. Higher lows, higher highs into the band, and overbought. Then we get to the British pound, and the market is wondering and sort of drifting here. Is the Prime Minister going to call an early election? The word is that he is, and I think he's weighing it and how soon to do that now. Number two, what is the Bank of England going to do in June? If you read their statement, they've opened the door for the possibility of a June cut if the data starts slipping, and they are seeing parts of the economy improve as they want. That's good news. Bitcoin, just fighting a massive battle at the 18-day average of closes. Too difficult. Don't waste your time trying to be a hero on it until it breaks through it one way or the other. Then we get to the energies, and you can see how they've narrowed in. So now the differential has gone from 520, 50 cents lower. That's a lot in the parlance of these spreads. And what do we have now? We have a higher high and a lower low. The market did as we talked about last week. It held in both Brent and WTI, the first challenge of the 100, 200-day average. I think professional money was covering shorts because the risk is back on now that Israel is determined to go after Hamas in Rafah and destroy what they can. On the other hand, the United States is exceptionally right about certain things. Where is the game plan for Israel when this ends? They're in the north again because Hamas has returned to the areas that they've devastated. So you need somewhere along the line, you just can't keep your armies there forever. What is the game plan? All right, that's going to be something that we're all going to ask. Now, in gasoline, we have not had the rally that I think most traders are on a seasonal basis, my hands up, we're looking for. I was wrong back here and never re-entered the long side of the market as it got under the 18-day average. And again, I practice what I preach for my subscribers. And I said, the bias is down. I understand that everything we read says it's going up. I can understand covering shorts, but I can't understand trying to buy this market. And yet, AAA is telling us, oh, it's going to be a record amount of people there. I get it. So I can understand the covering of shorts, but I don't see anything that's yet bullish in this market. And in nat gas, I'll let somebody else buy the Bollinger Band. Let it give a correction, and we'll take a look. The first support's going to be back around the 223.50 area. So in the mornings, like I just said, we have something for everybody. Are you a stock ETF trader, not futures? 9 o'clock in the morning, I start recording. Tomorrow it'll be earlier. I want to get the PPI number to you, how it's affecting the markets and so on. So it'll be a bit earlier. I like that first round of money to get into the stock market. You know that there's aftermarket. The market officially closes. Then you can trade almost everything you want in the aftermarket, right? You have an account, Schwab, Interactive Bro. It doesn't matter who you got. Robinhood, you can trade aftermarket. I want that money to come in because that's not what we see on the chart action. That's money outside of the charts. They are not included in the chart action. Futures are. So at 6 in the morning, I record in the futures, setting traders up for it. Now, what do we cover? And when I tell you there's a lot, we start off talking about a chart will look like this. More studies than you see. We're going to talk fundamentals, technical analysis. Did anything happen? Like you heard me talking about just now, what's going on in copper and the takeovers. Well, that's important because while the copper may not be getting a bigger amount bid out of China for the moment, takeover, that's where the assets are. Is that going to have to be worth more money? You go to our member section, the videos are there. They'll look this way, but it's one video after the other. In other words, one chart. There's 40 plus futures charts. There's 40 plus stock, spider, and ETF. Monday through Friday, I look first at the daily charts, and then on the weekend, I give you the weekend charts looking at some of the daily charts. Special reports, there'll be 2 out this week. So I'm committing to it right now. I'm going to put out 2 this week for you. I wanted to get into the PPI, CPI time frame. All right. And by the way, special reports are free to my subscribers. Other people only get a certain amount in a 1-year period, and then it's over for them, and it's a small amount. IraEpstein.com research, by the way, over means they're paying almost half to view one report of what a monthly subscription, the intro would be. You might as well take and give it a 30-day trial. But you can see where you're at right here, IraEpstein.com research. Move your cursor to the top. You'll see an icon. Give that one a click, and I'll catch you first thing in the morning after 8 o'clock. We'll go through the PPI numbers together. Take care.